Ladies and gents, let's get right into today's video. Hopefully everybody's doing good. You're gonna learn a lot in this video. Just like as always, you know what to do. Smash that like button and let's get right into it. I'm gonna show you guys in this video a strategy all brokers hate. We call it stacking. There's music to help you guys focus. Let's get right into it. So this here is called scalping. You're gonna watch me trade the markets. We're gonna make some money and then we're gonna bail. So what is stacking? Well, stacking, guys, is simply adding positions around a support level or resistance area gradually. That way you ensure that if you missed a specific support, then you can catch it again without getting closed out on the position. So here is US Tech 100, which is the NASDAQ. Let's bring the line, or in this case we're gonna use a box. I'm gonna put it right here at this support level. That's the green candle. So I'm also gonna get me another one. This time I will use, we'll use a box, no worries. So we're gonna put the box right here. So the box starts from the wick of the green candle, this one on the daily, and the bottom wick. Okay? Now that's the daily. So these are big areas where there's going to be buying pressure, and you can see we're already up near and approaching it at this level. So I'm gonna zoom in now to 1 hour. You can see that I am in the buy zone, but there's also room to go to the bottom of this. But unfortunately I use 1 to 200 leverage, so I cannot afford to see a 50 point drop in my trade. So I cannot use the daily as the main strategy when approaching the market. So I'll have to use the hourly and then 15 minutes. So here's 15 minutes, and you can see I'm still within the range of my support. So if I had opened a position here, and I'm just gonna remove this box for you. If I open the position here, because I believe this is support, I would have to start small because I know there is room to 1800, right? Because that's my support level as well. So there's two support levels, guys. We established two supports. One is here. First support, we call it. So this strategy is when you're not sure of where the price will bounce from. And here's the second support. Support 2. Okay, and maybe you find more supports. Maybe you have 10 supports, 5 supports. If we zoom in, okay, so let me just point this down. So this here means I'm not sure of where the market will bounce from. So what would I do? Well, I would initially begin entering slowly. So I would do maybe 2 contracts buy position. Okay, and I'm not using a stop loss now, but I will have to use it, especially if this is market open. So I would use a stop loss of 30 points. That gives me $60 in the red. But look, doesn't mean I'm gonna use this strategy. It just means I'm going to start gradually entering the trade while having money ready to go if the trade doesn't work out. In this case, it worked out. For 2 contracts, I made $10, right? So I can close it. About whether the trade works out. It cares about whether the trade doesn't work out, the initial trade. So if I say this is support level and I want to enter the trade right here, I want to have insurance. What if the trade doesn't work out? So if I have 20 contracts ready to go in this trade, I will just execute 2 contracts. Like here, for example. Okay, the price came to it, and I opened 2 contracts. Instantly, guys, I'm down $9. So I have another 18 contracts to go that I could open on this. Now look, I'm gonna open another 2 contracts here. Now I've stacked that trade. Okay, I'm getting good averages on this trade, and this is somewhat called averaging down. But when you're using 1 to 200 leverage, it's going to be very difficult to do that because you can't afford leave a stop loss high enough. So look, the first trade was red, the second trade came out profitable. So this will work out, guys. Stacking will work out if you use very small trading positions. So what I want to do next is wait for another dip, maybe halfway in here, and then I will enter that trade again with 2 more contracts. So initially we will have 6 contracts. However, if it works out initially, guys, you take the profit. It doesn't matter. But if it doesn't work out, then you have more chances to buy at a cheaper price. But don't go buying it on a fallen knife, for example. You have to know that when you're buying something, that it's actually holding a big support, which is the daily. We already identified it, and we put our line there. Remember, here's our support levels, and we put our lines on the daily. So if we zoom in, because the daily, guys, acts as a sure support. Like, the daily is very accurate. However, if you're going to trade a stock market crash, then no daily, no weekly will hold. But when there's nothing going on in the markets and it's just a steady market without any fear, then this will work like a charm. But when there's data and market crashes, this will not respect the strategy. So averaging down will not work here, guys. So you have to be very careful. And look, remember this. You have to do this with extremely low contracts. I'm not using a stop loss here, but I will, and you have to use a stop loss that's big enough to protect yourself. But this strategy isn't for everybody, guys. You cannot use that. Not everybody likes this strategy because it means you're gonna keep stacking and stacking, and maybe sometimes you even forget to put a stop loss. In comparison to the other strategy, which is just scalping it, okay? And brokers hate this because you're building a position as you go. So that, look at this beauty, guys. See that jump? $10, and I'm using extremely low contract sizes. What you would do this, guys, and remember this, I want to just emphasize this strategy is to be used when you have 2 support levels, one next to each other, and if you're not sure of where the support is. But if you are sure, then you have to use your scalping strategy that we used in previous videos. Okay, so now we're down. I'm gonna add another 2 contracts here. Now I got 6 contracts. Okay, and when it does work out, it will work out like a charm. So what I expect now is a push to the upside, and I can close my 6 contracts. What I want to do, guys, so look, now we're $16 or so, and this is for small accounts. This works great for small accounts, guys. So I'm just gonna remove this. So there's $30. Okay, I'm gonna remove this, guys. And yeah, I'll close what we have, $20 here. I'll close maybe the 20 when it comes. I will close it right next. Yeah, there's $22, guys, and this is 16, 17. Okay, 13 is fine, and this one we can wait. If it goes down further, I will just enter more, because remember, I already have my support level. I know exactly where support is. So that's the strategy of stacking, and brokers hate this because it's very rare to lose in these kind of situations. However, you will lose when the market decides, I'm not at support level yet. You got your support wrong, or you got your support levels wrong. So the support levels would be, you got this line wrong and this line wrong. The support is even lower. But we identified that support in this specific situation is these 2 lines. While if these 2 lines are broken, now we're looking at this support level, and when the market enters this range, then we will implement this strategy. But if it goes under this range, then it's just a fallen knife, and we can't implement this strategy. So here is $6 or $8, guys. Now I made like $50 scalping small in just this video. So it's very simple strategy for small accounts. And look, the market pushing down. It went all the way from here all the way to here. Similarly, if you're using resistance as for this strategy. But this strategy is to be used with extremely low contracts. In some cases 0.5 contracts rather than 1. Hopefully this helps, guys. See you next time.